Hi, this is Garrett Goggin, Gold Stock Analyst. Today we have Keith Neumeyer, CEO of First Majestic Silver. Hey, Keith, thanks for joining us.
Hey Garrett, how's things with you today?
We're good. We're good. We're busy. It's nice that the silver market showed a little bit of life here.
Yeah, we see some green on the screen, which has been kind of rare these last few months, so it's nice to see.
Yeah, it sure has. Um, I wanted to take the opportunity to catch up on the San Dimas acquisition. It was a complicated acquisition. You paid Primero 44 million in shares. You paid Wheaton Precious 151 million dollars in shares, and you repaid their Primero's convertible 75 mil convertible debt. The total deal value was about 300 million dollars. Is that correct?
Yeah, I think 310 was the total value.
Okay. And how did you come up? How did you come up with the deal value? What were you looking at to value San Dimas?
Well, I don't want to get too complicated, but we ran a 5-year model with different throughputs, and we came up with a value, and I think we got a heck of a deal.
Yeah, no doubt. Your last quarter for San Dimas really changed things, for your company. You were doing about 4 million AG equivalent ounces a quarter. You add on a good third quarter from San Dimas, it bumps it up to 7 to close to 30 million AG equivalent ounces per year. And then your grade, the San Dimas grade is through the roof, right? At about 600 grams a ton or 568 grams a ton. So it brings your overall mining grade for your company above 350 grams a ton.
Yeah, you're using equivalent
Yes.
ounces of silver. Yeah, but that's correct. San Dimas has got a nice gold component to it. It's about 50-50 gold silver or silver gold, and it's a doré producer as well, which is obviously a nice thing. And the ore body seems to go on forever. And this mine is really become a cornerstone asset for us, and will be modernized substantially over the next couple of years as we make improvements in the operation.
Now, as you referred to right there, you talked about improvements at San Dimas. You're hoping you're going to be adding the Hig mills to San Dimas.
That's correct, and there'll be other things as well. There's lime automation, there's cyanidation, cyanide automation. There's all kinds of process automation, lab reconciliation, mill reconciliation, all the different things that we've done, within the rest of the operations. This mill hasn't had investment in it for over a decade, and it needs some upgrading. And then we're going to be putting the Higgs in as well, as you mentioned, which is a big investment. But all these put together will just drive down costs quite nicely, we think, over the next couple of years. It's already a pretty low cost producer.
Oh yeah, no doubt. On an AG equivalent basis, 880 for $12 an ounce. I have it at
Yeah,
1168 an ounce over
uh,
third quarter.
yeah, I don't have the numbers in front of me, so if
Yep.
that seems high, I think it's in the 850 range, all in sustaining.
Okay. I'll take a closer look at that. Um, the is the mine plan going to change at San Dimas due to Primero staying away from the silver due to the stream that they had with Wheaton Precious?
Yeah, and that's one of the huge upside for us because Primero unfortunately was forced into going after high grade gold areas within the mine, and that's a huge land package. It's say 70,000 hectare land package, and they were driving 20 kilometers away from the mill, mining high grade gold and ignoring the silver, and it was, so their costs were through the roof. Their costs on a per ton basis was about $170 a ton when we first took it over. Today, it's hovering around $110 a ton. We think we can even get that further down over the next 12 months. And how we're doing that, we've changed, of course, mine methods. We went to long hole, and some other things. We've done some changes too. But the upside that you referred to was all this high grade silver that was left behind that was quite close to the mill. Unfortunately, of course, all the infrastructure has been ripped out, all the lights and their hydraulics and everything like that, has been taken out of those areas of the mine. So we're now in those areas of the old mine, rebuilding all the infrastructure to allow crews to get in there to start mining activities. So over the next couple of quarters, we're going to start to see the silver grades go up nicely.
Great, that'll be great, and hopefully you'll get a nice pop in the silver price and a nice pop in production. It might be a good time to start going after that higher grade silver.
Yeah, well, look, we don't make decisions based on the daily trading of the silver price. Unfortunately, longer term, of course, we have to make investment decisions. But you've got substantial cash flow coming out of this mine already with the current grades, and the silver was zeroed out to no value because Primero was forced to sell the ounces to Wheaton for $4.11 an ounce, and then so they couldn't make money on the silver. But for us, that cutoff grade is now cut by 50%. So we can go in and mine all the silver they're not behind and do very well doing it.
Right. I like how you put your money where your mouth is with that Wheaton Precious agreement where you converted the silver to gold at 70 to 1.
Mm-hmm.
Hopefully if, the ratio improves from its 85 back down to the historical average of 57, you'd be better off using that 70 average that it's locked in at, right?
Oh, for sure. Yeah, it's meant to be a compromise, and over a 20 or 30 year period, which is how we're looking at this. It averages out anyways, so it's really not that important. Right now, if it was spot, it would make a difference of about $200,000 a month. So it's really nothing.
Okay. And, San Dimas, low cost, generating a decent amount of free cash flow, close to about $40 or $50 million a year at these silver prices. This is going to be a good boost for your other operations, right? Where you're going to be able to take some of this free cash, reinvest it in your other operations?
Yeah, of course. And you're using that number, that 40-50 million, is based on our current costs as well. So despite the fact I'm bullish on metal for 2019, I could be wrong, but we are driving costs down. So the cash costs should drop and the cash flow should go up in 2019 and 2020. But yeah, of course, we've got two mines, Santa Elena, which is a nice cash cow for us, and San Dimas. Those are the two engines behind the company. We've got San Martin, which is making a modest profit at these prices. Like Encantada, we've got the roaster that is being turned on as we speak, and hopefully it's commercialized in Q1 of 2019. So, there's four mines there that are okay, and then there's two mines, the Lafree and the Del Toro, which need investment, and that's really where the focus is going to be over the next period of time, on development and exploration. We're also actually upgrading the mill at La Pria with some microbubbles in 2019 as well. So we are putting investments into these operations.
So La Encantada is going to see improvements from the roaster in first quarter 19. The Hig mill is going to be going in. When will that'll be going in over 2019, by the end of 2019?
We have it in our budget to commence production on July the 1st. Well, hopefully that's the case, but that's currently in our budget.
Okay. And when do you see the reinvestment of capital having an impact at Del Toro?
It's going to be a year. It's going to, Del Toro's going to have a bit of a challenging 2019. On a production basis, it only produces, I think, 5% of the production globally within the portfolio. So, it's you have one mine that's producing 5% that's struggling, and it's not that much of a burden.
Is the Hig mill going in at Del Toro also? Is that in the plans?
No. The Hig mill, first one's getting put in at Santa Elena.
Okay.
On a boat right now, and it'll be arriving on site sometime in mid to late January, hopefully up and running by April 1st is our target. And then the other Encantada one, it's also parts of it are on a boat, and it'll be arriving in February, March, and installed by July the 1st. San Dimas will be getting the third Hig mill, but that's not going to be until early 2019, early 2020.
And the Hig mill, it processes very fine grind, so it's going to help out with the manganese at La Encantada, right?
Yeah, that's right. And it's pretty interesting. The recoveries we're getting in the lab using Higgs at Encantada are just over the top. I don't want to put out any guidance yet. It's much too early, but great numbers. And with the roaster, with the Hig, Encantada could be up at, 4 to 5 million ounces of production annually again, back up to its maximum numbers that it achieved back in 2010, 2011, 2012.
And
that's what we're forward to.
By being able to access the higher manganese grades, you're going to be able to unlock value by going after some of those areas of the mine that you've been overlooking, higher grade areas that contain manganese that you've been overlooking in the past, right?
And interestingly enough, I think you know this already, but those high manganese areas just happen to have the high silver areas too. So you've got 300 grams silver with 4% manganese, and it's basically with that manganese, you're only getting about 30% recovery or 40% recovery at the most on that silver. So it's not even worth mining it, because you're just throwing so much into waste. So we left it there for the last couple of years, anticipating the roaster being constructed.
Good. I'll keep a close eye on that. And I mentioned Del Toro. Wouldn't the Hig help with the transitional ore at Del Toro in the future?
We're really just doing tests right now.
Okay.
We're really focused on the low hanging fruit. So we went after the bigger operations. Because your return on capital is much better on a larger operation, of course.
Right.
So San Dimas, Santa Elena, and Encantada, those that's where the big upside is. We're going to be substantially improving the economics of those operations by putting in these new technologies. Del Toro is still on the drawing board.
Okay, I got you.
We might combine micro bubbles, with fine grinding. We're just doing a bunch of tests right now in the lab to see what's best.
Okay, gotcha. And then Santa Elena, you've got a big land package around there that you're interested in exploring.
Mm-hmm.
And
yeah, no, Ermitaño was a grassroots discovery, 2 kilometers away from the mill, hit in 2017, and we put out our first maiden resource in early 2018. That resource is bigger than the original Santa Elena resource that was published 4 or 5 years ago. So
wow.
We're pretty excited about that. We had 2 rigs going. Now we've got 3 rigs active there at Ermitaño. So, we're expecting we're going to be extracting ore from Ermitaño in late 2019, early 2020 to supplement that mill. So we'll likely take off the processing of the heaps, because it was 60% of the ore comes from the mine, 40% comes from the heap. So if we could replace that 40% with Ermitaño ore, overall ore grades are going to go up. Of course, then production goes up even at the same throughput, of course, which will drive costs even lower, which is a pretty good thing. And then we can leave those heaps for, some other period when silver's north of $25, $30 or something like that, right. When it makes more sense. So we're pretty excited about it, but there's lots of, our geos have walked this property. It's 100,000 hectares in size. It's something in the order of 35 kilometers long or 40 kilometers long. It's a massive property, and they're pretty excited about a lot of different structures that they're dying to put holes into. We've been really focused on Ermitaño because it's close to the mill, but we're going to be drilling all over the property in 2019 and 2020. We're currently got geos walking the property right now.
So no drill program in place, but soon you're gonna.
Oh yeah, the program's all planned.
Okay.
2019 drill program's planned.
Okay. All right, and the heaps, the grade of the heaps is only like 75 grams a ton AG equivalent, right?
That's a good question. I think it's maybe 90 grams.
90, okay.
90 silver equivalent.
And
that's
then
with the gold.
What you're going to replace it with is the Ermitaño, and what sort of grades are you seeing there?
Oh, twice those grades. Yeah.
At least it's silver gold, right?
Well, yeah, you're talking about. I don't have this stuff in front of me, Garrett. I didn't know you were going to ask me a question. But silver equivalent's about 400.
Right.
With gold.
Right. Yeah, that'll be a big bump in production at Santa Elena and help even lower costs even further. That'll be.
Yeah.
I'm gonna have to.
Big there as well. Recoveries are already in the low 80s.
Right.
So if you get the recoveries up to the 90 range,
right.
With higher grades, you're talking about some decent improvements.
Right. Good. All right, Keith. Thank you very much for joining us today.
Okay, well, good chatting.
Bye. Gold Stock Analyst has been providing independent precious metal research since 1996. We offer 3 publications: GSA Pro, GSA Top 10, and GSA Silver. For more information, please visit us at our website, www.goldstockanalyst.com.